if you are a swing trader and your trades are going to last for more than 1 day and to a week and probably sometimes to a month, you need to know that technical analysis is not enough. So you need to balance this technical analysis with fundamental analysis. In fact, it is fundamental analysis that actually moves the market. So I have prepared a very simplified fundamental analysis for this new week. So every week I'll be here to do fundamental analysis for you as a beginner and also the experienced traders. Okay, so I haven't come to this channel. I want you to do me a favor. Most people there on this YouTube space, what they specialize is the technical analysis, but I want us to balance it, fundamentals along with technical and even sentimental analysis. So do me a favor, subscribe to the channel and hit the notification button, because every week I'll be coming with new fundamental videos along with other technicals. By tomorrow you can come back to the channel and see some swing trades that I will be calling free of charge based on the fundamentals that we have done today. All right, so see you in the analysis.
The first or the agenda here will be looking at hedge fund sentiment, GDP, inflation, interest rate, unemployment rate, and notable events for the week. Now, the hedge fund sentiment actually is an indicator I created that helps us gauge what the institutional traders are doing, because institutional traders, they actually trade in billions of dollars. So they place more trades. Now, look at this. For US dollar, hedge funds are selling the US dollar. They've been selling US dollar for a considerable period of time, but their last positions are still at a net short of 39.7%. So if you are buying the US dollar this period, you need to be very careful. They are selling the Japanese yen massively. They are selling Canadian dollar as well and Australian dollar. Although for the Australian dollar, their positions reduced from minus 14.2% to minus 10.7%. But overall, they are selling US dollar, Japanese yen, Canadian dollar, and the euro, slightly selling the euro. Now, the only two currencies that are strong based on hedge fund sentiment is the New Zealand dollar and the Great British pound. When it comes to Swiss franc, the hedge funds are beginning to increase their buy positions. Last week it was minus 1.7%. Currently they are at around 2% net long. All right, so that is that about hedge fund sentiment. Let's look at GDP. Now, when it comes to GDP, the GDP of a country actually has a positive correlation with the currency strength. All right, so when it comes to GDP, US has a GDP of around 3.4%. Other countries, Switzerland has a GDP of 0.3%, while Japan had a slight increase in GDP from minus 0.1 to around 0.1%, while Australia is around 0.1%. New Zealand has a negative GDP, but actually from the negative, it was around minus 0.3, but currently sitting at minus 0.1, so their GDP is increasing slightly. For Canada, they had a slight increase in GDP from minus 0.3 to 0.2, while Great Britain had their GDP dropping, okay, and the Eurozone has their GDP around 0.1%. So when it comes to the contribution of GDP to the strength of the currency this period, just know that US is still well positioned. Also note that Switzerland has a GDP that is positive. Canada has a GDP that is slightly increasing, while New Zealand is having a negative GDP, although there is a slight increase in their GDP as well. All right, so the next thing here is the inflation. When it comes to inflation, what I want us to understand is that major central banks, they like their inflation level to be around 2%, because at 2%, inflation can actually help in economic growth. But when there is no inflation at all, there won't be economic growth. Now look at US dollar. For the US, their inflation level is around 3.2, slightly increased from 3.1 previously. Switzerland has inflation that is below 2%. Okay, in fact, their inflation level moved from 1.3 to around 1.2. Okay, so what this means is that the Swiss National Bank will be looking for a way to bring inflation back to 2%. So you should pay attention to that. While Japan had their inflation level grow from 2% to around 2.8%, Australia, New Zealand, Canada, Great Britain, and the Eurozone, all of them had their inflation level dropping, although their inflation levels are still above 2%. All right, but for Canada, their their inflation level is almost at 2%, and for the Eurozone, almost at 2%. All right, so that is that about inflation. So when it comes to interest rate, when a country has inflation that is above 2%, they use interest rate, they increase their interest rate in order to cut down on that inflation level. But what we see here is that US has kept their interest rate at 5.5% for some time now. We are waiting for the first of this central bank that is going to cut on interest rate. Now, when it comes to Switzerland, they reduce their interest rate from 1.75% to 1.5%. They reduced it by 5 basis points. Now, this is in line with what we saw on the inflation reading, because they are trying to bring inflation towards 2%. All right, so you should bear in mind that Switzerland is looking for a way to weaken their currency. So if you are trading, just know that in the coming weeks or months, Switzerland will be looking for a way to bring inflation to their economy, because currently their inflation level is below the expected level. Now, for Japan, they increased their interest rate, and there is a rumor that maybe in the coming month, by October, Japan might also be increasing their interest rate further, but we are yet to see that. Now, when it comes to Australia, New Zealand, Canada, Great Britain, and the Eurozone, interest rate has been kept a bit constant for more than 3 months now, and then we are still waiting for the first of these banks to begin the interest rate cut. So that is that. Now, when it comes to unemployment rate, the unemployment in the US actually dropped from 3.9% to 3.8%, while Switzerland went from 2.8% down to 2.2%. Japan had their unemployment rate slightly increased from 2.4 to 2.6, while Australia had a drop in their unemployment data, while New Zealand had a slight increase from 3.9 to 4.0, and Canada has unemployment rate at 6.1, while we are also seeing a slight increase in unemployment rate in the Great Britain as well as in the Eurozone. So what does this tell us? When there is unemployment rate, there's two major factors that determine the central bank action. They are trying to make sure that enough people in their population get employed, get enough jobs, people are employed, as well as stabilize the price of goods. So if there is unemployment rate, the countries where unemployment rate is increasing, the central bank will be cautious to increase interest rate. Instead, they will be looking for a way to weaken their interest rate a little in order for people to get jobs. All right. So when it comes to those countries where unemployment rate is growing, we are going to see that the central bank will try to do anything to cut on their interest rate. So Eurozone, I am suspecting that Eurozone might be cutting down on interest rate, and we are seeing it here around the Great Britain. Let's watch and see what will be coming in the coming months. Now, these are notable events. What are the events that we should pay attention this week? On Wednesday, April 10, 2024, we'll be waiting for New Zealand official cash rate and the Reserve Bank of New Zealand statement. So that is one event that we all look up to. Then we are also waiting for the US CPI news. Now, Bank of Canada policy report and Bank of Canada rate. And then the final news on Wednesday, 10th of April, will be Federal Open Market Committee statement. Okay, so these events are something we should be expecting on Wednesday, and they are going to determine the fundamentals for the remaining part of the period. Now, on Thursday, we'll be looking at the Euro main refinancing rates. Okay, then US producer price index, and then US unemployment claim. Those are solid events that we should pay attention. And then finally, on Friday, April 12, 2024, we'll be waiting for UK GDP month on month. So these events are very important. Whatever position you are taking this week, make sure you pay attention and get the details for this event. The next video I am uploading is the signals.
And welcome back. If you have watched this video from the beginning to the end, then you are a great guy. Subscribe to the channel, be a part of the community. And if you want to see some of the swing trades that I'll be calling, there is a link, a WhatsApp channel link there in the introduction of this video. You know, if you check down, you will see a link on this video that will take you to that WhatsApp channel. So click on that link and join the WhatsApp community. You know, it's totally free, and you'll be receiving some of the swing signals that I'll be dropping there free of charge. You don't have to pay anything. So thank you and God bless you.